Markets have restabilized today after a wild ride yesterday, but the firm that was behind all the craziness, Knight Capital, is still going a little bit crazy. The shares are down 50% after it came out that the company needs to recapitalize itself by the tune of something like $400 or $500 million. Richard had a little look at this yesterday. Sounds like more fun today. What exactly is going on?
Yeah, I mean, it's hard to know exactly what happened, but what they're saying so far is they installed some trading software. They handle $20 billion odd of trading a day as a market maker, so for other people mostly. But their own trading software sent first thing yesterday, a whole bunch of bad trades to the New York Stock Exchange, and a whole bunch of stocks went haywire.
So a lot of trades wound up getting negated.
Well, some got cancelled, but also it's costing Knight $440 million to get out of the bad trades it ended up in. So quite how that could have happened, technologically speaking, I just don't know at this point. We just don't know.
Doesn't this just play into just this feeling of uncertainty in general that investors have? I mean, again, it's just I feel like yesterday when we hear that it was an algorithm problem, that isn't exactly reassuring, well, this particularly after what we've already seen.
And this is clearly the kind of thing where, in the old days, if we can call it that, you'd have had some sort of human saying, hang on, this doesn't look right, and it would have got stopped much sooner. On the other hand, I think there's a good case that the electronic trading makes things cheaper and smoother and probably more liquid. So
faster,
but it's a question, but things go wrong very quickly.
Yeah.
So this also, and the big problem with this all started with the flash crash, of course, a couple of years ago. And there have been more examples of that. This is kind of the biggest one since then, maybe. But there
I mean, people come to rely on the technology, right? And then it goes wrong. There's the flash crash in May 2010, I think it was.
Yeah. So they had the Facebook IPO, which
the Facebook IPO where Nasdaq kind of went dark, right when Facebook was supposed to start trading, the most high-profile IPO in years, probably.
Yeah.
You had BAT Global trying to go public.
Which is an exchange.
It's an exchange. It was trying to list on itself. It got all the early trades wrong, had to abandon the IPO, give the money back. I mean, total disaster.
And as you say, the confidence issue in the markets is really what's
which
at
I think
stake
is
here.
because I think there's this broader issue. I mean, all of this is happening at a time where, again, global financial markets are hardly, safe certain places, right? And then you have this, the infrastructure actually seems to be problematic. And I just think it feeds into this idea of do I feel comfortable, investing in this market? I mean, I just think
clearly it
feeds
doesn't
into
help.
that.
I mean, another imaginative, creative way that a financial firm has found to lose money, right? But also it's disrupted the market a little bit, at least, for everybody else, and that's
you also raised the
thing.
point that there is, technology is a way to get ahead in an industry, obviously in the trading industry particularly. That's what's driven a lot of this algorithmic stuff. You make the point, actually, there needs to be a little bit more hand-holding, a little bit more working together, maybe, rather than this competitive or even sort of pointing fingers at each other when someone does something wrong.
Somebody's technology screws up. It's okay to say, you're responsible, your fault, and if you've lost money, then you're entitled to be asking for somebody to make good on it. But on the other hand, everybody wants super fast trading. Everybody wants this stuff. You put in trading updates like Knight obviously did to their software, and it all went horribly wrong. Then, you thought you were getting a competitive advantage, but then from everybody else's point of view, you've screwed up the whole market. So you'd think that there would be a little more incentive for everybody to figure, for Knight to figure with the NYSE that this software works before they actually roll it out and all this kind of stuff. I mean, it just seems like some sort of hand-holding is a better first option than finger point.
All right, we'll leave it there, and we'll keep an eye on the Knight situation and be back with more breaking views tomorrow.